Hi, and welcome back to Reading Tea Leaves. I am John Ross, and this is where I take your stock and I run it through my brew of technical, sentiment, and macroeconomic tea leaves to let you know what I think of the stock and where I think it's headed. I also give you insight into my morning routine, and that is what type of tea I am drinking. Today's tea is a blend of two different teas and a few other things with loads of health benefits. I'm excited to tell you about that. Also, today's stock is an energy stock, and I'm bullish on this stock. And I think now might be the time to start picking away at some of the better stocks in the energy sector. And before I get into these two good things, I want to let you know, hit that subscribe button or that notification bell, and you won't miss a thing we publish to Reading Tea Leaves. Drop us a comment or a question or suggestion, or even a ticker symbol that we can run through the tea leaves to let you know what we think of your stock. Now, your participation and feedback is vital to this, and we appreciate it all. So, without further ado, today's stock is Enbridge Inc., and this is a midstream energy stock. And that just means that this company has pipelines throughout North America. It operates these pipelines and distributes crude oil and petroleum liquids and natural gas liquids throughout North America. Now, this is an established company with a big footprint as far as pipeline distribution of crude oil throughout North America, particularly in the U.S. They're also on solid financial footing. So let me just read you a few stats as well as some of the recent results from their first quarter earnings announcement. Now, Enbridge, it transports 24% of all the crude oil that's produced in North America. 24% of all the crude. It also transports about 62% of all Canadian crude oil that is exported to the United States. And finally, it accounts for 35% of all U.S. crude oil imports. And one more thing, on any single day, this is from the company's website, Enbridge is the largest single conduit of oil in the United States. They move about 85 separate commodities, including 10 types of refined products. So big player here. Now, as far as their first quarter earnings result, they beat on revenues in the first quarter. They beat on cash flow. And this just tells me that at a time when most companies are having difficulties, especially energy companies, Enbridge's business is solid, it is sustainable, and it can weather the storm. Now, the company or the stock sports a 7.5% dividend yield, and that alone is attractive and a reason maybe to put some money in play in Enbridge. But I think we should rest assured that at a time when most companies are slashing their dividend or suspending it altogether, the revenue beat, the cash flow, as well as the fact that Enbridge maintained its 2020 full year guidance, suggests that nothing's going to be happening to their dividend anytime soon. And as things begin to brighten up for the broad energy sector, it's going to really bode well for this stock. Now, I don't want to talk any more about that. You know I like charts, and I want to get into the price chart of Enbridge. Here it is. This is a daily chart of Enbridge, and several things I want to just run through with you to give you a sense of why I think there is upside ahead for this stock. I want to draw in an amp, which is an apex movement pattern, and I use these amps to give me a sense of where I think trends, whether they should be short-term or longer-term trends, will find turning points. And now, to me, this looks like a three-wave consolidation move. I've labeled it ABC here. I look at three waves just because of the psychology behind a three-wave move and the human nature that determines prices. So that's really at the root of these amps. And now, so if this is the consolidation pattern we're looking at, that suggests we will see a breakout to the upside to extend the move, the rally that took Enbridge into this consolidation. So I would use an extension tool just to get a sense of what kind of target we'd be looking at. I draw that into the consolidation, then down to where the consolidation finished, and that would give me a 100% target, or what I would consider a complete extension of that initial uptrend. So that would put Enbridge somewhere around $38 and change as far as a target goes. And I think there are some other things that lead me to believe we could see the price get to that area. I want to draw your attention to a pretty significant gap here. And that gap happened back in March during the sharp sell-off we saw in the broad stock market. And the reason I want to draw your attention to a gap is because gaps tend to get filled. So once a stock gaps and wherever it trades from there, it tends to eventually come back and fill that gap. So we see Enbridge on the climb here. And if we do get the breakout out of this consolidation, chances are it will extend at least enough to fill this gap. So if that would put us somewhere around a $37 price target on Enbridge, again in that ballpark of $38 per share. However, if we're thinking about gaps, we got to be mindful of the smaller gaps as well, and that suggests that we could see a bit of a pullback here in the days ahead, so that Enbridge can sort of retrace and fill this gap that happened or occurred when the market opened on Monday of this week. Many stocks gapped up on optimism around the Federal Reserve, around a coronavirus treatment, as well as new stimulus for the U.S. economy. So we could see some type of pullback, and let me draw that in, some type of pullback down through that gap before we then see some type of rally. Then maybe start to look for kind of that break up into that gap, but maybe not fill the gap right away. Another target that comes into play here is around $35.34 per share, or where the 200-day moving average is trading. And I like to look at that just to give a sense of where price is relative to kind of this longer term trend. I think investors generally look at that to get a sense of how attractive a stock is or has been to investors. So right now, on its way back up to test that, we could see the rally sort of stop there on that test, and then we see some type of pullback from there, maybe down to where the breakout happened, and then from there, maybe we see the final move that takes us up through the gap towards that $38 per share mark. Now, let's go back to the beginning. Let's use that extension tool, and that comes in nicely there, right around where we drew in, stylized uptrend, or that extension. So somewhere around $38 per share, that puts Enbridge at around an 18% rally from current levels. I think that could happen within the next 2 months. And I think Enbridge is one of those companies that, even though the stock price has been weighed down by industry-wide and sector-wide bearish fundamentals, ultimately this company is going to continue doing what it does and continue performing well and continue delivering for its shareholders. So I think this definitely deserves your look and maybe some of your investment money. Now, if you're a little bit nervous about the broader economy and the broader market still, I don't blame you. So maybe consider scaling into this trade and any other energy stocks that come up on your radar. Now, with all that said, let's turn to today's tea. And today's tea is called the Invigorating Blend. And this is something that was given to me by a friend of mine who blends a lot of herbal teas. Sometimes he brings green teas into it. And this one I really enjoyed because it does have actual tea in it. Some herbal blends don't have any tea at all. And that tends to be sort of to serve the market that doesn't want caffeine in their hot drinks. Now, this tea contains green tea and black tea. It's a Chinese gunpowder green tea, which is kind of a dry, smoky green tea. It still has a lot of the green tea flavors, but a little bit drier and smokier, just very subtle, but very good. And then an Earl Grey is kind of like a breakfast tea, almost like an English breakfast, but drinks a little bit lighter. So these two teas bring a little bit of caffeine into play here, and sort of is what helps create this invigorating blend that is good in the morning, it's good in the afternoon, just to kind of perk you up and give you that drive without having to pound coffee and caffeine. Now it's balanced out nicely with a few different things. One is ginseng, which helps concentration. One is lemongrass, which is a bit of a calming, soothing effect, as well as some other things. It also has cinnamon and cloves, which can act as anti-inflammatory or act with anti-inflammatory properties. And then for good measure, there's some orange peel thrown in. Now, full disclosure, I do not like orange peel in my teas, but I'm in the minority there. I know so many people love throwing in orange peel into black teas in particular and into herbal blends. And it does bring a nice citrus element to it, kind of a warmth that, I don't hate it, but it's not my favorite. But I know so many people do enjoy it in their tea. But ultimately, this is a very well-balanced herbal blend, tea blend, and you kind of get the benefits of both worlds here. Lots of nice flavors in the ginseng and the lemongrass and the orange and the cinnamon and the cloves, but at the same time, then you get your classic green and black teas in there as well. So awesome! So glad my buddy was able to start blending this for me. Continue to work with him on different blends and stuff, so it's fun. We'll bring more of those to you in Reading Tea Leaves as they come my way. So hopefully you enjoyed this. If you did, let us know. Subscribe, hit the notification, drop us a comment, question, or a stock, and we're going to run through the tea leaves for you. That's all for today. Thanks so much for watching. Have a great day, and we'll talk soon.